If you're waiting for house prices to fall, or you feel like you've missed your chance to get into the market, then this video is for you. I'm going to walk you through what's actually happening here in the real estate market in Kingston and what to expect in 2026. I'm going to walk you through 8 different factors that I'm watching closely and explain each one and how they could impact the Kingston real estate market for you as a buyer, seller, or investor. This is not a prediction video. I don't have a crystal ball and can predict what's going to happen in 2026. But what this is are real life factors that we're following each and every day so that we can advise our clients so they can make an informed decision. If you're new here, my name's Phil Willemsen. I'm a realtor with RE/MAX Rise. Let's get right into it. Number 1, interest rates and buyers' confidence. Interest rates remain to be one of the key focal points for investors, buyers, and sellers as we're following the Bank of Canada to see what's happening with interest rates. Right now, most buyers can get sub 4% fixed mortgage for 3 to 5 years. With the Bank of Canada holding interest rates in December and market chatter shifting from cuts to stability, we're advising clients and mentioning that it may be a good time to lock in for that 3 to 5 year term. This gives buyers peace of mind so they can forecast their total budget each year. But overall, for Kingston buyers, stability means predictable affordability, fewer panic-driven decisions, and overall a more balanced market. Until we have more developments continuing to grow in Kingston, the prices are going to continue to remain pretty stable. Here are a few developments that I'm keeping my eye on. The Madeline, a homestead building downtown. The Madeline is now complete and is filling up quickly. A 1-bedroom plus den at the Madeline starts at about $2,750. And for the higher end 2 bedrooms at the Madeline, they go up to about $4,500 monthly. A neat new development happening in Kingston is Confederation Park Basin. It's a major water revitalization project and it's set to start next year. It's going to have advanced downtown lookouts, a water park. It seems like a pretty interesting project that's going to separate Kingston from other cities. In terms of what's being built by developers, we're seeing a lot of townhomes being built to increase urban density. What we're not seeing is a lot of condos. So there has been a few that have been built in the last year and more supply coming in the future. But I think Kingston definitely is lacking in the condo community. Number 3, Kingston rental market and trends. Kingston was recently named the 4th most expensive rental market in Canada. The current average 1-bedroom price is just over $2,100, and the current 2-bedroom average price is just about $2,600. Student rentals near Queens are about $1,000 a room for a well-located home. That said, I believe rental prices in Kingston are going to trend lower, just with the market supply for rentals increasing with, say, the Madeline Homestead building and the homes being built on Princess Street. It's just going to create more supply for those rentals and opening the market to be a little bit more competitive. Number 4, mortgage renewals and seller motivation. Despite concerns about mortgage renewals, we're not seeing a lot of panic sellers in Kingston. Most homeowners were stress tested properly when they purchased a property, so they haven't found themselves in a situation where they need to sell. Although you do see some foreclosures and bank sales, but they are limited. What we are seeing pressure on are homeowners who must sell to relocate for jobs or other specific reasons. And we're seeing a lot of mom and pop investors who maybe own a property or 2 as investments and finding that the investments are no longer viable, so they're somewhat forced to sell and willing to take a bit of a hit in order to get the property sold. If we do see rents start to trend down, you could see also pressure on investors who buy student rentals near St. Lawrence, Queens, or RMC. Overall, we're not seeing anything drastic in the Kingston market. It's pretty stable and things are selling as they should as long as they're priced correctly. Number 5, government programs and first-time home buyers. With prices in the real estate market starting to come down, first-time home buyers are starting to re-enter into the market. These are supported by the first-time home buyers plans like the First Home Savings Account. The 30-year amortization adds more interest overall to how much you're going to be paying, but it allows buyers to get into the market, start paying for a mortgage, and building equity. First Home Savings Account is a great tool and I would highly recommend it. I will do a video if you're interested, just let me know below and I can explain all the details for that. I used it personally and would definitely recommend. Number 6, new construction in condos. One of the things I wanted to bring up is something that my clients have started to notice, and that's the price for condo fees as they've continued to rise since the beginning of COVID. Condos in Kingston are starting to face some pressure, and it's not the pricing of the condos. It's something that I wanted to bring to your attention and something that I think people aren't talking about enough, and that's the condo fees. For example, 185 Ontario Street is a condo building downtown. Right now, their monthly condo fees are roughly around $1,700 a month, and property taxes are about $8,000. So that equates to about just under $30,000 a year to have the condo building. That's not including price or anything like that, and potential assessments that could come up. Overall, condo supply in Kingston remains limited, and that's why condo prices have remained somewhat resilient. I think we're going to start to see more condos pop up in Kingston to help balance out that supply and demand. Number 7, economic stability and employment base. One of Kingston's biggest strengths is its economic stability. No matter what's happening with tariffs or government elections that coming up this year, I think Kingston's kind of isolated by the stability it has in its workforce. You have Queen's University, St. Lawrence and RMC, CFB Kingston, you have the hospitals, you've got the correctional facilities, and these all contribute to the stability of Kingston's economy. These stable sectors help insulate Kingston's economy from shock and other disruptions that might be happening in the economy of Canada. And for that reason, I think long-term Kingston is going to be a good investment and will help with house prices because we're going to continue to see the demand with more and more people moving to Kingston. Number 8, sales volume and market direction. So here's what the data tells us. In 2024, there were 1,680 homes sold, and the average price of a home was $630. Fast forward to 2025, there was 1,580 homes sold, and the average price was $629. Now this data is a little skewed just because I took it midway through December. There's more sales that are continuing to trickle in here before the end of the year. That's a difference of about $1,000 year over year, which is a pretty stable market. So I think we're going to continue to see the market start to trend upwards in 2026. Not too much, just stable and probably staying under inflation levels. But I think that's probably where we're headed. Personally, I helped around 30 buyers and sellers transact on their home this year in Kingston. And I have a front row seat on what's happening on the real estate market each day. What I'm seeing is strong demand for bungalows. We're seeing downsizers move into these bungalows. So they're paying a bit of a premium for these bungalows because there is a limited supply. Kingston's going to continue to see military relocations, so we'll continue to see lots of transactions happen over on the east end of Kingston as well as the west end of Kingston with the new crossing. Each year it feels like I'm helping more and more buyers move from Toronto, Montreal, and Ottawa to Kingston. There's less traffic, everything you need is here. They love the city, they love being close to the water, and the prices are hard to beat in comparison to those bigger cities. We're seeing the small-time investors leave the market right now, but that's opening the door for families and first-time home buyers to get back into the market. There really is no capitulation here happening in the Kingston market. We're pretty stable, pretty isolated, and I think it kind of continues like that for the next year. Last but not least, why work with us? In a market like this, finding a good deal isn't about luck. It's about strategy, negotiation, and local knowledge. We track neighborhood data. We understand pricing shifts, when they're happening, and how to utilize them. Overall, our goal is to help you make a smart, calm, well-informed decision for you and your family. If you're thinking about buying or selling or just want some clarity on what's happening in the market, I hope you reach out. We're always happy to have a conversation. That is my Kingston market outlook for 2026. Thanks for watching.